Hello, if you are a forex trader or you would want to know how to trade the forex market, then you are in the right channel. Kindly subscribe and click the bell icon for more trading videos. In this video, we will be looking at why price action trading is considered the best strategy by forex traders worldwide. As you all know, trading forex is simply buying and selling of currency pairs, but you don't just buy or sell a currency pair based on guess. If you don't trade in the right direction, I'm afraid you will lose your money. So basically, you know when to buy or sell by making decisions and analyzing the market using the technical or the fundamental analysis. Technical analysis is applied only to the price action of the market, while fundamental analysis is based on the data released by countries and financial organizations. I will not talk about fundamental analysis today. I will save that for a different video. So let's now talk about price action and what it entails. Trading with indicators can be very difficult, but with price action to give us the upper hand. And to really understand price action and what it means, we need to study what happened in the past, then observe what is happening in the present. And with that, I believe we will be able to predict where the market will go next. Using price action strategy, you will use tools like chart patterns, candlestick patterns, trend lines, market swing structure, support and resistance, and you can also use the Fibonacci retracement tool to know how far price will pull back. You should know that price action represents collective human behavior. Human behavior in the market creates some specific patterns on the chart. So price action trading is really about understanding the psychology of the market using those patterns. That is why you see price will hit a support level and then bounce back, and also price hits a resistance level and then heads down. Why? Because of collective human reaction. Price action also gives structure to the forex market. You can't predict where the market will go next. However, with price action, you can, to an extent, predict where the market can potentially go. And this is because price action brings structure to the forex market. Price action also helps reduce noise and false signals. But price action is not immune to false signals, but it is a much better option than using other indicators which are derived from the price anyway. So we will now begin with support and resistance, and under support and resistance we have a subtopic which is trend lines and trend channels. The wonderful thing that all market have is a history. The market will tell you where the sweet spot is on the chart, and these spots will be the foundation for everything you do as a naked trader, which is also price action trader. So these spots on the chart is the support and resistance level. As for me, I call these support and resistance levels zones. So the 5 important characteristics of these zones are as follows. Zones are an area and not a price point, and they are spots on the chart where price reverses repeatedly. And zones are where naked traders find trading opportunities. Line chart helps price action traders find zones, and zones are often seen by many traders. And I can say that support and resistance is the most basic and common form of technical analysis, and also one of the simplest to understand. Support and resistance, basically, they are horizontal lines drawn on the chart where price and human nature has reacted in a certain way in the past. Remember, we said we would want to analyze what happened in the past, and then analyze what is currently happening in order to predict where price will go next. As human beings, we have this inbuilt processor that likes to repeat itself. We do the same thing on a daily routine because we did it the day before. Now, this same nature and approach also happens in the price chart as well. You should take note. Support and resistance lines indicate a specific price on the chart where price reverses, while support and resistance zones are not a specific price. These zones are an area, or let's say a range. Now we will look at some examples. This is a line chart of the USD CAD currency pair. If I click on my horizontal line tool and place it here, you will notice that price reversed the moment it touched that line. Now we have ourselves a support and resistance line. Now the price reversed 3 times after touching that line. Now back to the candlestick chart, we will now find our zone. Remember, we said these zones are an area or a range. So to point out these zones, we will use this tool, which is on all trading platforms. Now you see that we have gotten ourselves a zone where price reversed multiple times. Naked traders wait for price to reach these zones before initiating a trade. What you will notice is that price has a tendency to reverse at the same level repeatedly. For the definition of support and resistance, support is a horizontal line, which is zone, drawn where buyers overcome sellers. So if sellers are moving the market down, buyers start to overcome the sellers and the trend reverses. They will push the trend back up from the direction from which it came. Resistance is a horizontal line drawn where sellers overcome buyers. The sellers start to overcome the bulls, therefore push the market down. If you take a good look at the pair we earlier drew our zone, this pair found support at the critical level pointed by the arrow, and the pair repeatedly found support at this level many times. Do you think that knowing where price may turn around is an advantage for you as a price action trader? The answer is yes, because if we look at this example here, the US dollar versus Swiss francs, notice how the market came down and touched the support zone pointed by the arrow and then is pushed higher. On this example, we see price reversed and went down after touching that resistance zone pointed by the arrow. This is what zones are. They are historical turning points. Price went back up to that same resistance zone after a while. Now the chart has a memory. These zones are critical for the naked trader. Once price reaches a zone, the naked trader, which is also a price action trader, is on alert for a possible trade setup. And we don't only use support and resistance as price action traders. We use several tools to decide when to take a trade. We will now talk more about these tools when we talk about candlesticks. The first step is price reaching a zone for the naked trader when setting up a trade. Now let's talk about the subtopic under support and resistance, which is trend lines and trend channels. Trend lines are linear support and resistance lines drawn on a chart to indicate the current trend of the market. Trend channels are formed when trend lines are drawn on the chart, and take note, linear support and resistance are drawn going downwards or upwards, and by drawing a downward support and resistance, you create a channel. The chart you see on your screen is AUD USD, and by drawing our linear support and resistance, we have created a channel. So the path that follows and the area enclosed within it is called the price channel. So in order to draw a linear support or resistance, we need a minimum of 2 lower swings to draw the support and 2 higher swings to draw a resistance level. And swings are where price reverses. And on this chart, you will notice how the price follows down and the channel enclosed within the support and resistance level drawn. Notice that the chart has 2 higher swings that is labeled with numbers which we used to draw our linear resistance. And not all support and resistance levels are created equally. If you really want to take trades that have high potential for success, you should focus on identifying significant support and resistance levels on your chart. And these significant levels are formed in the large time frames like monthly, weekly, and daily charts. Thanks for watching. If you learned something, give this video a thumbs up and don't forget to subscribe. See you in my next video.